Welcome to the Investors Trading Academy talking glossary of financial terms and events. Our word of the day is industrial metals. Gold and silver may get all the glory and look pretty, but when you want to build an economy, it's the industrial metals that steal the show. As such, base metals have emerged as a key way for investors to tap into the rapid development of emerging economies like China. As China builds new apartment buildings and factories, it needs iron for the trusses, copper for the pipes, and aluminum for the appliances. The granddaddy of metals for most of the last millennium has been iron. Iron by itself, and as the major component in steel, is the most widely used metal in the world. Examples of industrial minerals include asphalt, silica, gypsum, and potash, along with less obvious industrial minerals such as marble and diamond. Some important industrial metals include copper, steel, aluminum, lead, and zinc. In addition, rare earth metals, metals with unique properties that are increasingly being used in the electronics industry, make up a further subset of the metals market. That would make it a great tool for investors interested in tapping into economic growth, except for one thing: there is no direct way to trade it. Unless you want to buy a few freight cars worth of I-beams, there's no direct way to get exposure. This is likely to change as the London Metal Exchange, LME, is currently working on plans for futures and OTC contracts tied to steel, but there are serious hurdles to overcome. Industrial metals and minerals lie at the heart of the global construction and manufacturing industries. For that reason alone, it's always going to be a cyclical industry. Investment jargon for an industry whose prospects are tied to economic growth. The key question investors need to think about now with regard to the current cycle is: where is China's demand for industrial metals and minerals heading? Will it be sufficient to create marginal demand to take industrial metals and mineral prices higher?